people are a fan of rising prices at the shops, but the latest data from the Eurozone shows that is exactly what is happening. And while a rise in the inflation rate may be hurting some people, many investors see this as a good sign for the region's economy, as our Sukri explains why.
The main priority for shoppers in this market in Hamburg is getting the lowest prices for their fruit and vegetables. But for more than 2 years, persistently low growth in consumer prices has been a worry for central bankers and governments across Europe. Their concern has been that weak economic activity and inflation after the 2008 financial crisis could create the kind of stagnation that Japan has suffered for nearly 2 decades. But the latest data shows that aggressive stimulus measures taken by the European Central Bank and rising oil prices are starting to make things more expensive in the shops. Consumer prices grew by 1.1% in December compared to the same month in 2015. That's the fastest growth rate in more than 3 years. And it's much faster than the 0.6% expansion in November. But excluding food and energy, which can vary widely, the core inflation rate only rose by 0.9%. And that's still short of the ECB's target of 2%.
We really have to differentiate, oddly enough, between inflation and rising prices. What we have in the Eurozone isn't really inflation, it's just rising prices, particularly the rising price of oil.
And the ECB's job of trying to manage inflation and stimulating growth is further complicated by wide variations in economic performance across the region. Consumer prices in Europe's biggest economy, Germany, grew by a robust 1.7% last month year-on-year. That was more than double the rate in November. But prices rose by just 0.5% in Italy in December. And when looked at over the whole of 2016 compared to the year before, they fell by 0.1%. That made 2016 the first year of deflation in Italy since 1959.
Some people would argue that this is exactly why the euro itself is a misguided project, because it's very difficult, if not impossible, to have one monetary policy for such a diverse group of countries.
So while investors have found something to cheer about in the new year following these figures, a closer inspection shows that the Eurozone may not be entirely out of the woods yet. Azhar Sukri, TRT World.
And Azhar joins us live in the studio now. Azhar, we're seeing a little inflation across the Eurozone. Is that because people are feeling more confident and spending more, or is there something else at play here?
There is a little bit more confidence coming through, there's no question about it. Eurozone consumer confidence as a whole across the EU in December was at about a 20-month high. Yeah. Germany's consumer confidence numbers were pretty strong as well last month. But as we saw in that package, the overriding reason for this is actually rising oil prices. You know, after the OPEC output cut deal last month. Yeah. That has pushed up oil prices a little bit, and that's feeding through.
It takes up inflation.
And that takes up inflation. But as we said in that package there, that means that underlying strength of the economy is still not quite showing through.
Okay. And you mentioned in the report that Germany's inflation was up, Italy's actually going through deflation. And with all these economies in the bloc, you only have one central bank, one interest rate. Doesn't really work.
That gets to the heart of the issue. You've got a single currency, a single central bank, but you have different ways of countries raising money for themselves. Taxation policies vary from country to country. Regulations vary from country to country. And that is the fundamental criticism for the single currency. And we're going to see the currency being severely tested in 2017. You've got the French elections coming up, don't forget. Marine Le Pen has been talking about possibly taking France out of the euro. Of course, we've had Brexit. And and you've also got the Greek crisis still ongoing. Many people have blamed the single currency for Greece's troubles.
Of course.
You know, if
Such
Greece
a different
had
economy to the German one.
completely
Of course.
different.
Yeah.
Yes.
Okay. Well, after last year, you can't rule anything out this year, can you?
We're not making any bets.
Exactly. Okay,
Not
Asa,
this time.
thanks so much for that.